the market looks to be trying to break out. Here's what you need to know before the bell. Over the last few days, we've been talking about this consolidation and this compression of prices in the markets, and noted that this downtrend line that goes all the way back to the beginning of last year was kind of that critical juncture that the market needed to get over in order to potentially have a more bullish near-term view. Of course, that declining trend line is also being met by this rising trend line of lows from the bottom of the market in October of last year. So this compression of prices was the one thing that we were really watching here very closely. And that also coincided with this idea of an inverse kind of head and shoulders bottoming pattern that we have going on currently. And again, the markets were all kind of set here very bullishly to try to move higher. And this has really been kind of going in the face of the conventional wisdom that everything's bad this year. We're going to have a recession. Earnings are going to slow down. We've got a recession coming, and the Fed's hiking interest rates, inflation, all these very bad negative things. Well, that can only mean that prices go lower. Yet in the midst of this very negative view of the market, because everybody's now bearish, the market has been very quietly putting in a much more bullish technical picture. And we're now at that kind of critical juncture. Yesterday, the markets did break out above the 200-day moving average, but also above that declining trend line. And as the old Loverboy song goes, working for the weekend, everybody's looking to see what it's going to do now. And that's where we are. Now, this morning, futures are set to point a little bit lower. Might see a little bit of a pullback. Not surprising here after two fairly strong days. Markets have been up over 1% for the last couple of days. So again, a little bit of a pullback this morning, not surprising. What will be important is that the markets can hold on to this break above this downtrend line and also the 200-day moving average. If they can do that by the end of the week, that's going to be a much more encouraging position for the markets on a technical basis. Now, again, our MACD buy signal still in place. That's giving support here for rising prices. Market's not extremely overbought just yet. So again, there's not a lot of upside here at the moment. The markets are going to have to kind of struggle here a bit. But if the markets can get above this downtrend line and begin to kind of work this kind of support range that we're in at the moment at this kind of previous top level, and then move above that, there's a fairly substantial rise here, potentially to about 4,300, most likely on the markets near term. Now, that's going to be in the short term. Again, as we talk about these things, this is something that could happen over the course of the next couple of weeks, maybe couple of months. But again, later this year, we're still going to have to deal with weaker economic data, the impact of the lag effect of all these Fed rate hikes, recessionary pressures in the economy, the Fed tightening liquidity still in the markets. That's still going to feed through. So just because we do get this more kind of bullish setup for the market short term that leads to a rally, if that happens, now again, there's no guarantee it'll happen, but if it does, it also doesn't preclude another dive lower in prices this summer as we start to try to factor in all the impacts from a recessionary set in the economy if that occurs. So again, just pay attention to what's happening here. The bullish setup is improving, suggesting some higher prices. We've been slowly kind of adding some exposure to our portfolio over the last couple of weeks. But again, we've got very short leashes on these positions, and we will be raising cash once this market runs into its final course here over the next couple of months. I'm Lance Roberts, and that's what you need to know before the bell.